With mortgage rates dropping recently, there has been some chatter out there that now may be a good time to step back into the housing market. So, is now the right time to buy a home, or will you just be catching a falling knife with more pain on the way? Let's get into it. What is up, everybody? Welcome back to the channel. My name is Jay Costa. I'm a real estate investor and agent here in Northern New Jersey. As always, if you get value out of this video, please hit the like button down below and also consider subscribing. In addition, please let me know after you watch this video in the comment section down below what your thoughts are on the housing market and what I have to say. Are you a buyer? Are you a seller? Are you an investor? Are you sitting on the sidelines? Let me know what's going on in your market in the comment section down below. Now, onto the video. So 2 weeks ago, after a CPI report came out showing better than expected inflation data, mortgage rates plummeted from about 7.3% at its peak to where they're at now, which is like 6.65%. Now, obviously, that's a dramatic drop instantly, and it's saving potential buyers looking for, let's say, an average price home in this country about $100 a month. Now, that may not sound like all that much to you, but this whole year, buyers have been getting completely slaughtered from every which way, killing demand, and frankly as well, $100 a month can add up over a 30-year loan. This has sent some homebuyers that were on the sidelines back into the market. According to Redfin, in the week of November 18th, mortgage purchase applications, not refi, purchase, are up 8.7% compared to the same week the month prior in October. But mortgage purchase applications are still down 41% from the same week last year. So obviously demand is still down dramatically, but we are seeing a quick, albeit small, increase in buyer demand because of the mortgage rate situation. But just because some other buyers are stepping back into the housing market, does that mean that you should? And is 2023 going to be a good time to purchase a house? Of course, the answer, as always, is it depends. If you ask a real estate agent or a mortgage broker, is now a good time to buy, they'll always sell you on the fact that it's a good time to buy for obvious reasons. But on the other side of it, don't just listen to mass hysteria on YouTube and the media either, because frankly, they benefit from scaring the crap out of you. So should you buy? If you're a home buyer looking for a primary residence home, you do need to think long term, but also think smart. Here's what I would do if I was looking to purchase a primary residence house right now in this market for my family. Number one, only buy if you're a long-term buyer. Even though things have settled down slightly, there is still a fair chance that housing prices continue to fall, especially during a potential recession, I would say likely recession, in 2023. But if your outlook is long-term, I would say at least 7 to 10 years, you're almost never going to get hurt with that long-term of an outlook in regards to owning the home. Don't sit on the sidelines waiting for the perfect time, because I guarantee you'll never make a move. Number two, shop around for mortgages. Make sure you get at least 3 rates from different lenders. I would recommend going on a website like LendingTree or something like that, where you put in all your information and it spits back at you all of the best lenders as well as the best programs and rates in your state currently available. Number 3, make sure your lender's trustworthy. I've been seeing a lot of mortgage professionals lately selling home buyers on certain mortgage products that they don't know anything about. These would include loans like adjustable rate mortgages, where the buyer is enticed by a lower initial rate and monthly payment, but doesn't understand exactly how much that rate can and will go up in the future. Stick with a fixed rate. Number 4, do not rely on refinancing. This is something else I've been seeing a lot of recently in the real estate industry. A lot of real estate agents and mortgage brokers are selling the idea that no matter what rate you get now, you're going to be able to get out of it at a lower rate in a year or so. How many times have you heard the term marry the house but date the rate? Yes, it would be great if you could refinance your home in a year or two at a much lower rate, but there is zero guarantee that interest rates go down to previous levels. As I'm sure all of you know, historically 7% mortgage rate is still not even that bad. It's about average. And it's kind of where we were before the 2008 financial crisis. So just because mortgage rates have been super low since then doesn't mean they're going to go back there in the near future or even the long-term future. We could stay in this range of mortgage rates, let's say 6 to 7%, for years or maybe even decades. So do not, please do not sign up for a payment expecting and relying on the fact that it's going to be lower in the future. That's a recipe for complete disaster. You may be sitting there saying, well, with these rates as well as the prices that we still see on the market right now, that you can't afford anything. Well, this brings me to my one big opportunity that I'm seeing in the real estate market right now, and that is fear. You see, here's been what's going on in the housing market across the country. Affordability was already a huge challenge, as we all know, because of the all-time high prices. then the interest rate started spiking so quickly at the beginning of this year. This made buyers rethink their priorities, and they simply can't afford the homes that they were trying to put offers on a year ago. For instance, if you had a pre-approval for, let's say, $900,000 a year ago, now you're going to be pre-approved for only maybe around $700,000. That's a huge drop. And even though housing prices, and specifically list and asking prices, are going down, they're not going down as quick as they need to in order to keep up. But anyway, in my market, anecdotally, I am seeing a lot of opportunity because, one, there's way less competition, and number two, these sellers are way more willing to negotiate. I have been finding that sellers may be less likely to actually drop the asking price of their house. If it's sitting on the market for a while at the same price, they're more willing to negotiate on lower offers. This also applies to you investors out there. Remember a year and a half ago when you're just trying to find any investment property that made sense, but nothing made sense at all, going 100 grand over asking with 20 bids on it? Well, that is way more rare now than it was then. So right now is the time, whether you're an investor or a first-time home buyer or anything, now's the time to go in there, look at properties for sale, and don't be afraid to send what would be considered, or what your realtor would be considered, a lowball offer. In fact, I just did this myself as an investor. On a property that I was looking at, they were asking originally $925,000. I offered $800,000. They accepted the offer. I had an inspection on the property. There was a lot of issues with it. I got them to drop another $100,000 off their contract price, and we're currently under contract on that. I'm going to make a video about this specific investment in my next video, so definitely subscribe down below if you want to know when that is uploaded, because that ended up being a really great deal, and I think we're going to do really well with it. But that is the opportunity that I'm seeing in the market right now. You're able to take advantage of the fear from the buyers, as well as some fear from sellers as well. Scoop in, make an offer, and get a property for 10 to 15, maybe even 20% off of the asking price. I think it's way better to get a property for $100,000 less than the asking price at 7% than for $100,000 more than the asking price at 3%. And the reason for that is, even though the monthly mortgage payment may be, let's say, about the same on both, you're starting at a way more conservative price point, and you'll be much more insulated from potential further housing market price declines. The bottom line is this: as long as your outlook is long-term, like I said, at least 7 to 10 years, and you're signing up for a fixed payment that you can more than afford, and you get a home less now than you could have a year ago, you will be more than fine to buy a home in 2023, and actually, I think you'll end up in a pretty good spot. That is it for today, guys. Thanks for tuning in as always. Let me know in the comment section down below what you're doing in the housing market, where you see your local housing market going, because obviously housing markets are so different. They're so locally based. They're different city to city. Here in northern New Jersey, we have been a little bit different than some of the other markets around the country the last couple of years. Yeah, our home values definitely went up, but not quite as inflated as some of these other places that you hear about, like Austin, Texas, and Boise, Idaho. So, and we're right outside of New York City, so you would think that there's always some sort of demand kind of keeping the housing market at least somewhat afloat around here, where, at least for the foreseeable future anyway, who knows about where New York City's going, but for the foreseeable future, we always have kind of just that at least medium-based demand that keeps us afloat, and you may not be able to say that for some other markets. So if your market's like that, let me know in the comment section, and see you next time.